Hey, good morning, everybody. It is Friday. Let me get rid of that. It's Friday, February 6th, 2026. I, of course, am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. That's right, y'all. My company is actually Hammer Solutions, but three different products. I know many of you know me for Originator Success, but we also have Grab and Go Social to help you to get found on social and get some loans from social, and Rate Sensei, which is all of the market stuff. My hat's dirty. I gotta clean this messy hat. Come on, Hammer, get your stuff together. So, anyway, good morning, y'all. So great to have you. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. If you're here this morning, say good morning. If you're watching on the replay, go ahead and give me a hashtag replay. Let me know in the comments. If you would like to start joining me live, maybe you need a little bit of a reminder. We send out a text message every time I'm going live with the links to make it easy for you. You could sign up for those. They're free, of course, hmmr.io/reminder, or use this cool QR code over here. If you're on your phone now, take a screenshot, go to your photos. On Apple, at least, I know you press and hold, and it will open the link. So anyway, you can go ahead and sign up. If you would like, you could also sign up for our daily lock advice emails. Let me go ahead and show you. This morning's has already gone out. Let me share with you what you would be signing up for on those. So here you go. Here is our daily lock advice email. And today's quote of the day: a wise man will make more opportunities than he finds. So you can sign up for this. It's at ratelockadvice.com. Give you a quick recap. We talked to you about what's going on over the next few weeks and all that good stuff. So go ahead and check that out. And also our text alerts. They're $7 a month if you want to track the markets, but you don't want to spend a lot of money. You don't want to necessarily look at the candlesticks or see everything in real time. You can go ahead and sign up for those at www.raytextalerts.com. Often during the day, things will change, like yesterday, and you will want to know about it. And that's how we show you. So make sure you sign up for those. They're cheap and you can't beat them. So with that said, good morning, all of my live friends. So great to have you here. I'm going to jump in. Let's go ahead and get started with a recap on what happened yesterday. I'm going to zoom in down at the bottom here. And first, we'll start with the technicals. Let me refresh this page, bring this up for you. So if you take a look yesterday, I'm going to go ahead and where's Presentify? Hold on a minute. Presentify is not loading. There we go. Let's do that. All right, there we are. So taking a look yesterday, pricing comes out generally around 10 a.m. Eastern time. You could see where mortgage-backed securities were right about here, and they improved very steadily through the day. We had a lot of momentum yesterday after a little bit of a weaker start, but we saw an improvement right here. If you remember, that was the Challenger jobs data. Then we got the jobless claims, which brought us up, and then we got JOLTS data, which came in the morning. So yesterday was a plethora of different labor market data, and that improvement that you see here, that actually helped to drive quite a few reprices better yesterday through the day, mainly in the afternoon, but there were definitely quite a few reprices better yesterday. And that was a nice improvement. Now, this morning, you could see that today, mortgage-backed securities actually started the day off weaker. You see that right here. See that drop? That is a little bit weaker on the day after overnight trading, but nothing to really get worried about. But look at this. We've seen a very, very steady improvement. This going up. Up makes us smile. It's good for rate sheets. Mortgage bonds currently down a basis point, which it's flat. I mean, anything within plus or minus 3 basis points, you're basically, they're rounding, you're making up. But we actually are pushing into positive territory. Now, that means that rate sheets today should be a little bit better than yesterday. And we saw that after being at about like 6.20, we were back to about 6.17, even 6.16. So last Friday, this is last Friday right here, right? This is last Friday, 6.16. Today, we should be at basically, I need to, hold on a minute. There it is. We should be right back here. Not a tremendous amount of improvement, but basically putting us back where we were last week, 6.16, 6.15. So after just slightly, I mean, look at this. We really do major in the minors. I'm surprised y'all even bother to watch me anymore. Rates have been so stable. It's insane. Take a look at the chart up here. And let me even make this a little bit. I mean, let's pull in on this. There we go. Just like that. I mean, look at that. I mean, it has just been so consistent. Remember, we had this little nice blip right here. This was after the Trump post about getting the GSEs to buy mortgage-backed securities. So we saw that. And ever since then, that did go ahead and reduce the spreads. Now, I'll tell you, speaking of the spreads, the spread is what are mortgage bonds trading at compared to the 10-year Treasury yield? And they tend to kind of move in lockstep. So the 10-year, though, look at this. One of the biggest improvements we've seen in quite a while yesterday. Look at the size of that green candlestick. Now, remember, when we look at the 10-year, you're looking for the yield to go down to give you a smiley face. Whereas over here, when we're, I wish I could, I can't scroll when I have that's why I have to do this. So when you're over here, we want this side to go up. We want the 10-year yield to go down. And look, the 10-year yield, we were at like 4.28 for most of the week here. 4.279, so 4.28, 4.27, 4.28 again. That's where we've spent the week. And then last week, look, 4.24, 4.23, right now 4.20. So the 10-year is poised to end this week better than last week. Mortgage-backed securities ending the week about the same. Last Friday, we were at 100.02. This morning, we are at exactly 100.02 at the moment. So that really basically washes us out for this week. And that's why you're seeing better rate sheets today. It'll put us back to what we saw at the end of last week, that 6.16. I mean, again, such small movements here, though, for rates and pricing. So keep that in mind. Nothing we have to get excited about. Reprice risk on the day is low. I'm not expecting that we see anything big movement-wise here. At 10 a.m., we're going to get consumer sentiment data. I think that could push these back into that positive territory. If that data is even remotely, showing any kind of consumer sentiment weakness, you get a little bit of a boost in bonds. But overall, it's a Friday. It's going to be a quiet day. Reprice risk on the day is low. There's really not much else. Now, this reaction, though, that we saw yesterday to the three different jobs reports. And again, those jobs reports, the first one is from, they call it the Challenger report, but it's actually Challenger, Gray, and Christmas is the agency that comes out with this. And basically they're posting on all of it's like the JOLTS data. So the Challenger report, January job cuts surge, the lowest January hiring on record. This is obviously signals of a weak market. Now, remember something, though. Employers are holding on to workers. What we're seeing is they're not bringing on new workers. That's the big thing here. Job cuts surge in January. That is, I said they were holding on to workers, and then they turn around and say there's job cuts surging. So that's kind of, up until this, we had seen that they were holding on to. Highest January total since 2009, lowest January hiring on record. This is a big deal. And what we saw happen is we saw a reaction here in the Fed futures. If you looked back at March, we were at like 90 something percent that there would be no cut. And now it was up to almost a 20%. And actually yesterday it was much higher than that. It was 23, but it was actually even higher than that before it started to fall later in the day. So we've seen it fall back a little bit, but this is the first time that markets have started to entertain the idea that maybe the Fed will be forced to cut rates before Powell leaves office. Powell leaves in May. So we've got two more meetings, March and April, the end of April, which is right before he leaves in May. So we've got two meetings, but by June, look at this. Right now, this is what we're currently at. So by June, markets believe 75% chance that we'll see a rate cut in June. They think once Powell is out the door, there'll be a rate cut. But for the first time, because of that labor market data yesterday, we're seeing entertainment of the idea that the Fed will have their hand forced before that meeting. So that's what we're kind of looking at now. Again, yesterday, look at this improvement in mortgage-backed securities. Look at all the reprices better that came through. And again, giving a plug, I'm using MBS Live. Of course, you can see their service right here. But you take a look at all of the reported reprices better yesterday. The reason I'm bringing that up is it changes my mind for locking and floating. I would be floating it all, floating everything till Wednesday's BLS jobs data. Okay, so here's the gig, right? I don't always like to float into the jobs data, but based on yesterday's strong reaction, that markets really, any sign of weakness, if we see that BLS jobs data kind of continue. So I talked about the Challenger report, then we had jobless claims, and then we had JOLTS data. The JOLTS data, what happened? I had the JOLTS data up. Let's do that. There we go. So the JOLTS data, it showed that, it was December's data. Yesterday came out at 10 a.m. It was December. So it wasn't January data. So it's a little stale, but the February release, job openings decreased to 6.54 million, significantly below forecast. So again, less jobs for people to jump to. There's less jobs created. Now, the quits rate remained at 2.0, suggesting lower worker confidence in switching jobs. That's a big deal because it shows that not only is the labor market weakening, but the workers believe the labor market is weakening. This says layoffs and discharges held at 1.1%. Again, compared to though with the Challenger report, which this is January data, that was December data. So we're going to get the next JOLTS will come out in the beginning of March, and that'll be the January data, and that will have a lot more of an effect. So we could see a lot of movement. But next week we got the BLS jobs data. If it shows continued weakness, that's going to be a big one for. Hold on, I'm trying to stop sharing. There you go. If next week's jobs data shows weakness, I think we see mortgage rates improve a little bit more. Could they get back the full quarter that we were at a couple weeks ago? Maybe, especially with Friday's CPI inflation data. Next week's going to be a big week. We were supposed to get jobs data this morning. That got pushed back until next Wednesday. We were supposed to get the CPI inflation data next Wednesday. That got pushed back till next Friday. So next week, we have another one of those double whammies. Very rare that we've ever seen that, right? We saw it last time because of all the delays with the government shutdown. This one, we're going to see it again. We're going to get BLS jobs data on Wednesday, inflation data on Friday. If we get favorable data, it could push rates lower. So because of that, I'm actually in a floating stance, even for loans closing in the next 15 weeks, which normally I tend to just lean towards locking those because it's not worth it. But when we look at what's happened with rate sheets, we look at where things have gone. Right now, we are poised. We could end the week this week with bonds slightly better for the week after losing ground, looking like we were losing ground through the week. We could end the week better because of yesterday's performance. Yesterday was a big day. So Derek Bobadilla, the jobs report specifically. What's my opinion on the accuracy? I don't care. I think it's all made up. I think it's all, you've got, seasonal adjustments and all these other things. And I think all of them are kind of made up. Don't you guys? Really? Doesn't sound like there's tremendous. It's not like we actually get true data. We get interpreted data. It's like the Bible. It has more interpretations than the Bible. That was always my joke about different things, about interpretations and consumer regulations, and compliance. Everything is open to interpretation. What should be hard data is not hard data. It's adjusted for the snowstorm, adjusted for the holiday. Why do we not just take the actual count? Because they want it for consistency. And if so, you're manipulating the data, Derek, I think we need to start paying attention to possible future shutdowns. We won't have to worry about it until September. most of the government is funded until September. There's only the last component of the Department of Homeland Security that they're arguing about here. And, you could say that would affect air travel because it's TSA and things like that, but I don't think it will. It didn't this time either. So I don't think we really have to worry too much about that. Is there? Derek said, I locked yesterday. It's crazy not trusting this market, and the reactions are huge. Yeah, I mean, and again, there's never a bad idea to lock a loan, especially as long as the consumer's on board, right? And being good on it. Morning, Einkorn. Got one today, but not yesterday. Oh, what did you not get? Why am I not getting the text reminders? Anyone that does get the text service, there was definitely an issue with some of the carriers yesterday. It's been resolved. We were working with Twilio and our other vendor on that, so it was a bit of a weird one, but I think we've got everything resolved. Technology, it does it sometimes, and we think everything's fine until we start hearing reports that it's not. That's frustrating. So how about after September? I don't know, man. I'm hoping we're all here after September. We can worry about it then. We'll see what the political climate is and if it's an issue. But right now, the reality is that where rates are likely to be this year, let me go back to let me show you guys the lock advice thing that I have here, right? All right, let me put these side by side. So, I mean, if you're not signed up for the lock advice, I'll throw the link for signing up on the screen again. And if you're not getting the email, but you are signed up, please let us know. Because again, deliverability on things is always a thing. So, but taking a quick look here, the outlook for the next 15 days, strong reaction to the signs of the labor market data yesterday felt like someone tipping their hand, right? When you're playing cards. If next Wednesday's labor data shows more softening in jobs created or a jump in unemployment, it looks like traders are just waiting to jump on that news. Yesterday, after the labor reports, futures on Fed rate cuts jumped, with markets entertaining the thought the Fed may have to cut before Powell's term is over in May. And I've told you guys all this. This is what we talked about already this morning. As far as beyond that, when you start looking at over the next 2 weeks, rates look like they're going to be around the same or could move lower. It looks very unlikely that we have to worry about rates creeping higher from here. That opens the door for more. Now, again, that can change. Momentum, the idea of which way the trends are going, that could change. But right now, it's looking pretty good. And anything that's 30 days out, anything that's closing March and later, I wouldn't worry about locking at all, because even if we have a report next week that isn't favorable, even if the jobs data isn't soft, even if the inflation data isn't helpful, we're going to go through it all again at the beginning of March. So loans that have a month out, I wouldn't worry. I would not be locking those loans right now. I wouldn't take the worst pricing, and I think there's opportunity to see better rate sheets between now and then. Are rates going to drop to 5.5? No. But could rates do the 5.99 thing again? Yes. So I would be taking a look on that. What's my opinion on home price appreciation or depreciation? Some have increased their outlook. I think it's really dependent on what area of the country that you're in and what agents are trying to list homes as. When you look at price appreciation, homes haven't really lost any value. What we've seen is they're not appreciating because agents are encouraging, sellers to ask for more, but they're taking less. My son's house that he bought January 9th was listed at $450. It dropped down. When it got down to about $415, it started to get action. Then at $415, we offered $4. That's a 20% difference from what they went to market with, because what they went to market with was way wrong. They were swinging for the hills, and I think it was the agent. I think the agent talked the seller into asking for that. We offered $4. And then we picked up another $4,000 in repair concessions. So, I mean, they went from $450 to $396, and oh boy, home prices are dropping. No, it sold in 22 for $320 something, right? So called $325 or $322. So it sold a few years ago for $322, and now it's selling for $394. 6, it still went up in value in my area. I mean, I would love to say that I don't think home prices should have risen that much, but they also got a very good price on it in 22 because of where it was, what it was. I think it was in I think it was like a friendly but still arm's length transaction. So anyway, I don't think we're that. What do you guys think? Do you think that we're seeing home prices depreciate? I know in some areas we are, but I think overall, I think it's still a strong market, and I don't think anybody wants to face the realities of what it is. What we need is more multi-family buildings. We need more, by me, they're building apartment buildings and people are losing their shit. Here in the Smoky Mountains, here in Waynesville, North Carolina, they're building apartment buildings and people hate it. They absolutely hate it. But that's how you house people. And that's how you get them out of their parents' basement and into apartments. Now, rent prices in median in the nation have come down. They've come down. Rents have come down. So, and that's what kind of needed to happen is that you need a stepping stone for people. But I don't think that home prices, I don't think we really have to worry about. And if rates do go down, I don't think it's going to drive home prices up tremendously, but there's a good demand now. There's a very good demand. So anyway, my friends, I hope that answers your questions. Derek, thanks for asking questions. Love when you do that. I didn't see, has Siegel joined us today? Nope. No Siegel. So he didn't tell us what today is. But anyway, hope that helps you. Hey, y'all, do me a favor in the comments. Just let me know what you're doing this weekend. Say hello. It helps with engagement. I like to hear from you guys. And I have not been saying the names. Let me know. Do you guys miss me saying the names at the beginning, or do you like me getting into the action a little faster? So faster or names. If you like the names, say the names. If you like me doing it faster, say faster. Please give me that in the comments. I'm going to take a look at that. I'd like to see what y'all think. Do you like it when I say good morning to everybody? Kind of my romper room style. I see Zane. I see Carmen and Derek and Kim and James and Bree and Deb and, or do you like it when I just kind of jump right in? Allison, when you say outhouse races in Sapphire, are you talking Sapphire, North Carolina, right? I think you go to Sapphire. You're not too far from my neck of the woods down there by Highlands, Sapphire, Cashers, and outhouse races. I don't even know what they are. Yeah, Jerry likes faster. Okay, good. Thank you. Again, let me know, James Mahan and y'all, let me know faster. Okay, good. So you guys are into that names build community. I like them. I know, Deb. I do too. But I've had a lot of people that are like, come on, Hammer, get to the good stuff. Let's go. So I am going to adjust my format. We got 38 people live here. I'll tell you, we've had shows that have been hitting over 100, even 200 people live. And I would love to do that consistently. So I'm going to get into that. Scott said the good stuff faster. Yeah. Holly Johnson, seems like your comments from YouTube aren't coming through. We can't see any of the comments that you're reading either. You don't see them on the screen right now? You don't see any of the ones I'm reading? Oh, well, if I read them, unless I click show, do you see it if I do that? But you should be seeing the screen. I'll have to look at what's on. But your YouTube comment, you're on YouTube. I see your comment. But you should see on my screen, you should see the chat overlay. Shitter on skis. That is what it, that is funny. That is funny. That is crazy. So, Ms. Angela, watching the Super Bowl, day out in the desert. Very cool and faster. All right. I'm glad you guys, thank you. I've always appreciate it. So on that note, I'm going to wrap up. Again, thank you all. I will see you on Monday. Take care, everybody. Bye-bye.